Hey, what's up, everybody? This is Chef again, and I want to do a quick breakdown today. I know there's a lot of questions being asked right now and a lot of confusion and things like that. So I'm going to point out a few things here with the market, and hopefully this gives everybody a little more understanding as to what exactly is going on and what to expect moving forward, and potentially we found a bottom, right? As crazy as that sounds, right? So, anyways, I know yesterday we had the Fed meeting, and the interest rates are still going to get increased and whatnot. So, when that's going to happen, I don't know. I didn't really check up on the news or anything. I think it was more of just checking out the candles today and looking at the reactions and the follow through of what's happened, right? So in the past, I want to mention something very important, that every time we had a Fed meeting, we've always had a green candle, and the next day we always dropped and making new lows. Okay, that is the number one thing to take note of today, from yesterday. Sorry, and the follow through into today. The difference here is that the characteristics for that specific trend has changed today. Okay, yesterday the Fed meeting actually pumped the market. So I'm going to go on the 15 right here. I'm going to delete this. And then, so here, this is what I want to show you, right? So this is where the Fed meeting began. And then we ran all the way into this point right here. So we dropped and not many sellers came in. So the characteristic still was on the table. The table meaning that we're still pushing up and we may drop into the next day, right? Unfortunately, we did not do that today. And that's what's confusing a lot of people, because everybody has this pattern right here, this little wedge pattern. And I want to show you on the hourly chart. Everybody has it drawn like this. Okay, now I drew this a little different, but most traders are drawing it like this. Okay, this is where it gets confusing, because now you're trying to draw things that are not even there, but it may look like it's there. Okay, so this is what a lot of people have drawn. As you can see, there's stuff missing here, stuff missing on the bottom and the bottom, right? So what I did is, okay, let me just take that off. Oh, shoot. All right, so I'm gonna take this off. All right, so I'm gonna do this proper. And I'm got that bottom of the wick and the bottom wick. And again, I'm on the hour chart, okay? So it's a little different, but we still have this top right here that needs to be connected. So technically we kind of have like a little wedge pattern type thing going on, okay? But again, everybody has this pattern. Now, the one thing that we fail to realize is that the characteristics changed on something that's been happening in the past, okay? What is price action? I always say that price action is something that's happened in the past that will most likely happen in the future. When that doesn't happen in the future, it means that there's a change, a shift change, a price action change sentiment. Okay, so if the history is not repeated, then most likely the future will be different from your history. Your history meaning that every time we pumped, we dumped. Okay, did that happen today? Did we dump, or did we push up? This actually continued to push up. That is the difference. That here, what happened is the shift change, the price action change, the sentiment change. Everything changed about the characteristics in the market. So that whatever happened, whatever was said, I don't know. I don't know the full details. And honestly, it's not a big deal to me, because what the chart says here is that the characteristics changed. So therefore, at this point, where do you identify something that changed? It's very, very simple to identify that. Based off what happened yesterday, right? This is your Fed meeting, and this is your top. All you got to do is come on here and look at that same level, and are we breaking above or breaking below that specific price point? Number one, look at the way that this was set up on the pre-market. You had a nice little base here. So technically, we had a nice rally yesterday, a nice pump. We found the top. We came down here. We tried to push above that pre-market, and it came down and it pushed above. The first 15-minute candle was solid green. Therefore, at this level right here on the break above from yesterday, you know that the market is going to go bullish. Number one, because the characteristics change, the market went green, and there was no more sellers that showed up at this specific price point. I know some of you are looking to go short here or to go long right there, but in reality, what happened based on the characteristics from the previous day because of the Feds, it was at this price point right here. Now, psychologically, what happens is a lot of traders look at that 4K number. The 4K number is where everybody starts to think, hey, we're over this whole number. And what's been going on recently is that the psychological aspect of the market has been playing whole numbers. When we're over 4K, guess what? We're going to 40.50. Over 40.50, we're going to 41. That's the way that this market has been playing. The movements have been that aggressive. Okay, that's what the volatility means. The volatility meaning that there's a lot more buyers and sellers coming in the markets, and it's creating a lot of bigger movements and shift changes that's making people and dropping people. It sucks to say that, but a lot of people are blowing up accounts and a lot of people are growing accounts at the same time. Okay, so that's the characteristics and the price action change sentiment coming from yesterday. Now the shift change is happening today. Now another thing I want to point out. Okay, after all these drops, what's happening here is the previous few days we actually created a demand, right? Some of you guys are going to grab this bottom, some of you guys are going to grab this top here, and then try to find stuff. But what happens is the same thing that I mentioned over and over and over in these videos is consolidation accumulation. A cluster of candle bodies that are accumulated in one spot that creates pressure points. Okay, so look at this. Look at all these candle bodies that were formed right here before we started breaking out. Look, we peaked right here on Monday. Okay, so we peaked above, we came back down, and we came down, but we closed inside. The candle bodies are inside. So all the buying pressure is coming in between this 39.50 and this 39. Okay, that's where the buying pressure is happening. That's where the adjustments are happening. That's where somebody is loading or unloading. And how do you determine where it's going to be, where people are loading? On the break above 39.50. Look what happened yesterday. We broke above 39.50. We closed up top. And now what you're looking and what you see here is from the previous day is a nice rally, base, rally. So that is what's changing now in the characteristics in the market today. Okay, so don't get confused. So I'm here to break down the tickers and the way that the candles are moving and the way that the characteristics are happening now, right? Some of you guys still are saying to short the tops, that we're still going to go bearish and things like that. And that's okay. I totally agree with you that you can still short tops. But remember one thing, there's a time and a place to be able to short tops, to get stopped out, and to reverse and to get into call positions. Now, I know some of you guys are a little worried, but don't be. If you're a little worried and the put play did not go your way, simply stay out and don't take any trades because the direction is not going in your favor. This way it saves you a lot of headaches and you don't have to come in here and wonder why something is going bullish and not dropping. Clearly, if we're more green than red, then you should be in call positions, right? And clearly, if we are more red than green, then you should be in puts. In this case, the pattern right here, I'm going to show you the pattern again. Okay, the pattern that was supposed to be bearish actually played to the top side. On top of that, you got the demand. On top of that, you got characteristics that changed due to the Fed Powell speaking. On top of that, you got an intraday from yesterday into pre-market, into today, a rally-based rally. Okay, so I'm giving you guys tons of bullish scenarios here that is happening with the market. Now, we do have these two tops up here. So these are the tops that were broken as well. From this channel here, these two tops, these also broke today. Okay, so we had a bearish pattern with demand that broke above with characteristics that change sentiments, confirming today to the bullish side. Now, what is something that you're going to look for? Somebody mentioned today that they were in puts and that the percentage was still in their favor. So they're not at a big loss, which is good. Now, what I'm going to show you guys, is another tip that you guys can look at, right? What's happening here is that the IV here and the price of the contracts are still in put favor, okay? The IV is actually dropping now. So the value for these put contracts are still a bit heavy, okay? Now, SPY is a very liquid stock, so I can't come in here and show you a specific number, but just know that once these start going losing value, what's going to happen is the shift change is going to happen to the call side. The call side is going to be a lot more expensive. So the shift change is going to happen with the contracts. That shift change has not fully happened yet. I think it will more fully happen probably into next week, where contracts start to change. I think it might actually happen today, to be honest. I haven't really searched it, but just know that. So if these are more expensive than the put side, there's a higher probability that we will go bullish into the next few weeks, right? Sounds crazy. It almost sounds like we're finding the bottom in the market, and it's exciting. But at the same time, it is, because we haven't seen a bullish week, right? So what I'm going to do now is I'm going to delete all this here, and I'm going to show you another thing, okay? The cool part is that you got to look at weekly levels as well. Weekly levels is very, very important to understand, because now, number one, what do we have? We have a demand that's actually holding, okay? This was the demand that I gave you guys in the previous video that would potentially hold or continue to the downside. Look at the way that this weekly candle is showing now. Today, we're legit showing a bullish engulfing candle, okay? Now, it's the total opposite of a bearish market. This one here played out a head and shoulders. We got a doji at supply, and we played out for 1, 2, 3, 4, 5, 6, 7 weeks straight of being red, guys. That is huge. Now, what are we having? We're going to have a bottom with a bullish engulfing candle. Like, that's huge, guys. If that doesn't excite you, then I don't know what is, right? The doji here should have excited you for puts, and a lot of you guys played puts on the downside. Congratulations. We hit a bear market right here at this price point. Down here, we hit a bear market, and that's kind of like another indicator that says, hey, we need a relief bounce before we continue into this bear market. Unfortunately, we may not get that continuation to the downside. And who knows, this conversation may be different into next week, depending on where we close into tomorrow, right? So now what I did is we had to hold 50% of this price point, right? So this 39.70, okay, I'm just giving you a psychological number. 39.70 holding more than half of this means that the bulls are in control. If we don't hold 50% of this to the downside, then the bears are not in control of this specific trend, okay? Now, if this closes above, which we're already above that weekly candle, 40.25, okay, I'm giving you psychological, we're gonna have a bullish engulfing candle tomorrow, okay? I don't know what this is gonna look like tomorrow. I mean, for all I know, we can wake up again at 3,900 and say we're freaking bearish again. So who knows? This conversation may be a bit different, right? But either way, be prepared for this, because again, if this does hold 50%, if this holds green the rest into tomorrow, there's a high probability that we found a bottom in the market in general, and we're going to start shift changing, and a lot of tickers are going to start playing out bullish patterns, okay? Now, this conversation will be a little bit further in detail in the weekend, but for now, we're just going to keep looking at those two specific levels. And the question is, are we above? The answer is yes. Are we bullish? The answer is yes. Are we bearish yet? The answer is no. As long as we're holding 40.25 and above, we're good for calls. As long as we're holding psychological 4K, I think we're slightly bullish today, and we're looking for that shift change to hold its momentum, okay? Now, again, don't come in here and say that, hey, I'm going to short this top because this market has to drop, or this market has to see this new low, or this market has to gap fill and things like that. Please don't do that, guys, okay? Well, you guys are day traders. Some of you guys only day trade on the 5-minute time frame, and you take profit within like 2 to 3 candles, and you're super happy, right? If that's what you do, then leave it that way. If you're a swing trader and you're looking for the bigger movements, then be patient and look for that bigger movement and accept a good entry and a good stop loss, right? Everything is managed properly and should be managed properly based on the proper levels that you are on the time frame. Okay. Again, don't come in here start getting uh, uh, a bias into what you think has to happen. If a level is breaking above, let's go to that side. If a level is breaking below, then let's go to that side as well. Okay. Another thing I want to show you is the Vix the Fear Indicator. Okay. No specific price points here. Just know that if we did break below this 28 and we start trending back down, 28 and 26, the fear is basically going to die down just a bit more, right? There is a lot of fear that was happening here. Okay, tons of fear in the market, and we're still kind of in that specific area. But today the VIX dropped, which is amazing, meaning that there was less fear today than there was the previous days. And as you guys can see, the VIX has not made any higher highs and the past couple of weeks. So there's not tons of fear, like severe fear. Okay. So taking it easy and finding bottoms in some tickers is kind of like the way to go now, because there's a lot of tickers on sale. There was a lot of great plays for earnings and so on and so forth, right? So remember, we were oversold on so many time frames and levels for the markets, and we're now finally currently breaking above, right? So accept it. That's what I'm trying to say, right? Same thing here with NQ. Okay, I want to show you the way that we built a base down here as well. We see that we did not drop any further. Here's your base. Here's your little trend line on the bottom, and then here's the break above finally, and this thing is moving on up. So where's your target? Normally your target becomes your supply, which is right here on this candle body here, and then this top right here. Okay, so that's going to be your supply. That's your target into tomorrow. Again, if we have a bullish sentiment and continuation, because technically what this is going to do is going to be breaking pattern, I believe. So let's check this bad boy out. Here's your NQ. And we're heading into that direction right now, right? So we're heading into here. If we break above that, see NQ, I'm just getting more alerts for NQ. NQ is just busting. So be aware, guys, that the market may have found a bottom, and don't get biased on the bearish side, thinking that we still have to gap fill to the downside, or thinking that we have to see COVID lows and things like that. A lot of sectors are still holding value, and I really haven't seen much continuation to the downside so many tickers in the market. So just remember, we do have a demand. Look for RTY as well. RTY did create another demand as well. Just let me show you guys. Here was all the demand that was created. As you guys can see, all these clusters of bodies were here, and then they finally base rally, and this thing is breaking above. Nice solid bullish candle. So expect a little more continuation into tomorrow, where bulls may actually win some. Please, guys, again, I'm here to just explain you the basic market direction today and how things shift change and what you can look for. Hopefully this gives you more of a leading indicator and a little more knowledge as to what is happening today and what may potentially happen as well, right? Another thing that I looked at today was this pattern here on Apple here. This thing dropped right at pre-market and didn't continue. So when I knew that Apple was going to hold here, I knew that this was going to push strong here. So look at this. It broke below, came back inside. I was looking for a short position, but that never happened. So I never got in. So this technically just blasted on up. It held demand, pushed above, and the market just went bullish, guys. So honestly, no reason to go short whatsoever just yet, right? Let me show you a few more tickers that are pushing up as well. Google, same thing. Tons of volume just in this previous candle over here. It's been pushing ever since, and then it broke above as well. Another ticker was Amazon that broke above. We've been waiting for this thing. This thing ran nice yesterday. I saw this thing trending up. It hit 22. It finally broke some supply. So a lot of tickers in the market right now, guys, are busting through. So what you're going to look for is the retracements or the continuation, honestly. Facebook busted out. Look at, I'm getting all my alerts now. While I'm making this is intraday. BA as well also just finally decided to break out today. I was waiting Monday to see if this were to break out. Never broke out, and then the one day that I didn't put it on my watch list, it actually broke above. So market looking bullish for now, guys. Look for the next piece of 41, as crazy as that sounds. 40 around 40.80 and 40.94. That's the next piece that I'll be looking for into tomorrow if we continue bullish. And remember that this is going to create a very, very strong weekly bullish engulfing candle. So be ready to shift change as to what you guys are playing. Okay. Other than that, hopefully this helps. Stay on your toes. Either way, if the play is not going your way in your favor, get out. You don't have to sit here and wait for something that's not going to play out for you in your favor. Be patient and accept that things are changing. Okay. So yeah, hopefully this helps, guys. And just another market update for you guys. And let's see what happens over the weekend and into tomorrow. Hopefully we are bullish, guys, because man, we need a bullish run. Man, we need to see new all-time highs. Like we need to see some strong recoveries in the market that can just drive, right? So congratulations to all those bears that partook in that huge drop. Now it's time for some bull plays, I guess, for now, right? So congratulations to everybody who took calls today. And if you're just taking trades, great job. Other than that, I'll see you guys on the next one. And yeah, trade safe.